Hello and welcome to 10-Minute Mastery. This session will be about journalizing merchandising transactions. This is part 2, journalizing more purchase-related transactions for a merchandising business using the perpetual inventory system. By the end of this 10-minute mastery, you will be able to journalize purchase-related business transactions involving a merchandise business. Let's review what we know from part 1. For a merchandising business, they will purchase products to sell to customers. In a perpetual inventory system, each purchase of merchandise is recorded in the inventory account, and each sale of merchandise is also recorded in the inventory account. Remember that journalizing is the process of recording business transactions using a journal. Keep in mind, every transaction impacts at least 2 different accounts. Also, in a perpetual inventory system, the inventory records are continuously updated. This is also known as being perpetually updated. Let's get into the examples. Transaction 1. On October 13th, purchase merchandise from Paul's company in the amount of $12,000, terms FOB, destination 210, net 30. First of all, FOB destination means that the seller pays the freight costs. Net 30 means the payment is due within 30 days of the invoice date. And 210 means a 2% discount is provided if the buyer pays within 10 days. This transaction impacts the merchandise inventory account and the accounts payable Paul's company account. You can see here I have completed the math. We needed to take into account the 2% discount that was provided. So our journal entry looks like this. First, we record the date, October 13. The debit is to the merchandise inventory account in the amount of $11,760. Our credit is in the same amount for the accounts payable Paul's company account. Example 2, transaction. On October 14th, issued debit memo to Paul's company for $2,000 of merchandise returned from the purchase on October 13th. So now we are returning some merchandise. The accounts impacted are accounts payable Paul's company and the merchandise inventory. On your screen, you can see where I did the math for this transaction. So we needed to deduct for that 2% discount. So on October 14th, we record the debit first in the amount of accounts payable Paul's company in the amount of $1,960. And then for the credit, we use the account merchandise inventory in the amount of $1,960. Example 3, transaction, October 18. Purchase merchandise from Jasper Company in the amount of $17,000. Terms FOB shipping point, net end of month. This particular transaction involves the merchandise inventory account and the accounts payable Omega Company account. The journal entry looks like this. First, we record the date, October 18th. The account that is going to be debited is merchandise inventory in the amount of $17,000. And then we have our credit using the accounts payable Jasper Company in the amount of $17,000. Example 4, transaction. On October 18th, we paid freight of $180 on purchase from Jasper Company. Accounts impacted are the merchandise inventory account and cash. We record this transaction like this. On October 18th, we enter our date here, and then we enter our debit first, merchandise inventory for $180, and then we're using the cash account for the credit of $180. Example 5, transaction, October 23. Paid Paul's company for invoice of October 13, less the debit memo of October 14. The accounts impacted here are accounts payable Paws Company and cash. Here, the amount is going to be $9,800. The date is October 23rd. The debit is to accounts payable Paws Company, and the credit is to cash in the amount of $9,800. Let's check out one more example. Example 6, transaction, October 31, paid Jasper Company for invoice of October 18. Accounts impacted are accounts payable Jasper Company and cash. The amount here is $17,000 because that's the amount that was impacted by the October the 18th transaction. So we need to debit accounts payable Jasper Company in the amount of $17,000 and we credit cash in the amount of $17,000. Thank you for viewing. Feel free to leave a comment and don't forget to subscribe.